We should now be live. Good morning, colleagues, and thank you for joining us to this morning's meeting of the Audit and Governance Committee. Due to the rapidly rising COVID-19 cases rate in the district and the more transmissible Omicron variant, I took the decision to hold today's meeting virtually so as to enable the meeting to take place safely. You will recall that local authorities lost the ability to hold formal decision-making meetings online in May 2021. As our meeting today is non-decision making, I'm assured that we are able to proceed. To ensure that the meeting is accessible to members of the public, the meeting is being live streamed and it will also be available after the meeting to view on the Council's YouTube webpage. What the Omicron wave has reinforced to me is the need for the Council to have the flexibility to hold formal meetings online where necessary. Alongside the Local Government Association, the Council continues to lobby government for the necessary powers to enable us to do so going forward, and I fully support this. Before we move to the formal business for the day, for the benefit of those who may be joining us online, I would firstly like to introduce myself and the committee members. I am Councillor Jackie Spate and I'm the Chair of the Audit and Governance Committee. I'm joined by Councillor Les Shaw, who is my deputy, together with Councillors David Dagger, Alan Garbett, Tony Hames, Hilary Mitchell and Nicola Stansby. Also serving on the committee as independent members are Nigel Brooke and Nigel Green. The committee is also supported by a number of council officers who are joining us today alongside our external audit partner from Deloitte, Nicola Wright. We will also be joined by officers who are to present their individual reports throughout the meeting, and I will introduce them at the appropriate time. But before we move on to the formal agenda items, and for the benefit of those joining us online, I would firstly like to confirm today's meeting procedures. We will take each item on the agenda in order, which has been circulated to members in advance of the meeting. The agenda for the meeting is also available on the Council's website. Only members of the committee will have their cameras switched on during the meeting. Supporting officers present in the virtual meeting room will have their cameras switched off. Could I ask those officers who are presenting reports and answering questions to switch on their cameras when doing this? I would also remind colleagues to ensure that your microphone is on mute throughout the meeting unless invited to speak to minimise the potential of background noise disrupting the meeting broadcast. You can indicate your wish to speak by pressing the raise hand button at the top of your screen. I will note your requests and will invite you to ask your questions in the order in which they appear on my screen. When invited to speak, please unmute your microphone before addressing committee and then remute once you've finished speaking. Again, once you have spoken, could you please repress the hand icon button, which will take your hand down. At the end of the debate, I will seek confirmation from the meeting that you agree to the proposed recommendations. If everyone is happy, then I shall proceed with our formal business. Agenda item 1 is apologies for absence. Could I ask Michael if there are any apologies for absence or to confirm that everyone is present?
I have received no apologies for absence, Chair.
Thank you. Item 2 is the Chair's remarks, which I have none. And there are no urgent items, so I'll move straight to item 4. Do members have any interest to verbally declare in the matters before us? I shall take silence to indicate that there are no interests. Thank you, that looks to be clear. Agenda item 5 is to approve as to correct record the minutes of the previous meeting held on the 6th of December 2021. Are the minutes moved? Did anyone move the minutes? Thank you. Nigel Brooks moving the minutes. And the seconded? If someone could do so verbally, because I can't see everyone.
I'll second it.
Thank you. Thank you very much. Okay. Right, so all in favour? That appears to be carried. Thank you very much. Now, is there anything in the minutes which members may wish to raise? Okay, lovely. So then we'll move on to agenda item 6, which is the risk assurance item covering financial resources, which can be found on pages 1 to 7. The purpose of this report is to share details of a corporate strategic risk, whilst providing us with the opportunity to challenge and seek assurance that the priority risk is being well managed. At the conclusion of the presentation, there will be an opportunity for us to select a risk for scrutiny at our February meeting. Bradley Frost is the Council's Corporate Risk Manager. Could you please introduce the report for us, Bradley, before handing over to the risk owner, who is Chief Financial Officer Neil Warren?
Thank you, Chair. Good morning, members. Good morning, everyone. Yeah, I'm just going to briefly introduce the item, then hand over to Neil. So on the report on my page 9 at item 2.1, the purpose of this item, as stated by the Chair, is to introduce an assurance piece in respect to the risk relating to financial management. The only other thing that I want to say before handing over to Neil is that on page 10 at point 5.3, just to highlight to members that currently the 2 further assurance items which will come to the February meeting are around business continuity and organisational priorities and capacity. Now, obviously, it is within the remit of this committee to consider those items, and at the end of this piece, we can either approve those items to come to the February meeting, or we can look at other items. And the last thing I will say is when these items or alternate items come to February, that will form part of the full suite of corporate risks which I will present at that meeting. Without further ado, I'll hand over to Neil. Thank you.
Thank you, Bradley. Thank you, Chair. Morning, members. So this is the strategic risk aligned to financial resources. I'll just run through the risk description and then move on to some of the mitigations and controls. So in terms of the risk, it's due to increasing cost pressures and demand for services coupled with limited and volatile funding, that there is a risk that there are insufficient financial resources available to support the delivery of the Council's strategic and statutory duties, which could result in a budget overspend in year and compromise the Council's longer-term financial resilience. The papers in the pack which is before you set out some of the planned, set out some of the mitigations and controls that are in place currently, and further ones which are ongoing and planned, and then some further ones which we're looking to put in train in the coming 12-month period as well. I'll not reiterate what's before you in the paper. But I would just want to take this opportunity just to talk around a few things in a little more detail, if I can, outside of that. So just in terms of the finances, obviously a key part of this risk is when we set the annual budget. And members will be aware that the initial budget proposals are going to Cabinet tomorrow. Following a period of consultation, they'll then be going back to Cabinet in February and then on to Budget Council in March. A key element of this risk is the robustness of that budget and the adequacy of the Council's reserves, and also the budget setting process. So if I can, I'll just run quickly through that budget setting process and the robustness. And then I'll move on to some points around the wider financial control environment and how we then monitor the budget and highlight issues as we go through the year. So just in terms of setting the budget, and this is obviously the key part because it's the element where we go to full council, members approve the budget, set the council tax, etc. Not just the revenue budget, but also the capital programme, treasury management strategy, and other line decisions around pay policies, local living wages, etc. Just in terms of how we set the budget, it's not done once a year. It's a rolling process. We started the 22-23 financial year's budget. We started that process back in 2020, if not before, through our medium-term financial planning. And back in November 2020, we then start to form some of the high-level assessments of changes to funding and costs. We look at costs in terms of inflation, trends in terms of service demands, budget growth areas, full-year effects of previous decisions made by Cabinet, etc. We also look at income in terms of sales, fees and charges, and funding in terms of council tax, business rates, government funding, both core government funding and specific grant funding. And we look at those over a multi-year period, but then in more detail about the year in question. We stress test all our assumptions, and we compare our assumptions as well with other West Yorkshire local authorities, and we also have advisors who work with us in terms of our understanding and modelling. And we also have relationships with the Special Interest Group of Metropolitan Authorities, SIGOMA, and Local Government Association, etc., where we also get intelligence and information. We monitor key in-year pressures as they emerge in the budget, whether that be through increasing demand or whether it's through additional decisions or changes to income, and we model those into our planning. We also have continual discussions with budget holders, corporate management team, portfolio holders around the service aspects of that. I'm always keen to stress that the budget is there to support the service priorities rather than an end to itself. And obviously there are political ambitions and decisions that feed into that budget process as well. In terms of robustness of the budget, I personally have to give a statement of Budget Council, a Section 25 statement on the robustness of the budget, where I reiterate some of the controls, but also the adequacy of the Council's earmarked revenue reserves, including unring-fenced general reserve, earmarked reserves, etc. And not just for the year in question, but longer term. Just in terms of the robustness as well, we also look at the major risks associated with the budget, do a risk assessment in terms of impact and probability, and we do a combined calculation and then look at that compared to the general reserve to make sure there's sufficiency in that general reserve. The general reserve at the moment sits at 15.4 million, and I can confirm to members that is more than the cumulative impact of those combined risks through that process. I also look at the strength of financial management and reporting arrangements, and I'll come on to those now if I can. So financial control environment, this committee receives an annual report from myself in terms of the control environment, and that feeds into the annual governance statements. And that's a positive report, not just in terms of the adequacy on robustness of the control environment, but also around the Section 151 responsibilities outlined in the Constitution, and that I have delivered on those. Outside of that, there's the financial procedure rules, contract procedure rules, schemes of delegations, budget holder framework, etc. They're all that the things that members would expect in a complex organisation like ours. I've touched on the risk-based reserve strategy. We also do risk-based in-year monitoring, financial monitoring. If there is an issue, it will probably come up in our financial monitoring rather than in the budget. So it's key that we maintain a focus on our in-year financial monitoring, and we do that through monthly risk-based discussions, but also through reporting to officer-wise, to corporate management team, member-wise through to cabinet. This committee also plays a role in terms of seeking those assurances. An overview and scrutiny committee also receives presentations from myself or from other finance officers in the year to give that committee there an opportunity to scrutinise the arrangements, but also to seek assurances in terms of our in-year financial position and longer-term financial position. And I'm at Overview and Scrutiny Board this afternoon in terms of presentation on the initial budget proposals. We have a monthly financial performance group which I chair, which is myself, the service manager for financial management, and also group finance managers, where we look across the breadth of the council's budgets, but also across our partnership arrangements as well. So we look on a quarterly basis at wider in terms of, for example, Bridge Homes, which is a partnership housing company with WDH. We also look at pool budget arrangements and any of the arrangements which could impact on the finances of the council. We do that each month. I also have an internal audit function whose plan includes fundamental assurances around the fundamental financial systems. And as I said before, we have member oversight in terms of not only cabinet, in terms of in-year financial health reporting, but overview and scrutiny and audit and governance committee. within the paper, you can see there are references to some further work. So we have a review of capital framework processes in terms of prioritisation and outcome measures, benefits realisation, how we monitor the benefits and align to our capital programmes. And that's a piece of work that we're keen to look at this year. I'm also keen to look at as well the health check, if you like, of the finances of the council longer term, given the uncertainties beyond March 2023, and assurances around value for money. And lastly, for me, Chair, before I sort of take questions, I just want to make the point around the council's draft corporate plan, which is going to Cabinet tomorrow. That's a new corporate plan supported by a 2-year delivery plan that obviously sets the context in terms of the council's strategic priorities and the context under which the budget will support the delivery of that corporate plan. That's going to Cabinet tomorrow and then onto full council in February. And that's a key document in terms of aligning the strategic priorities of the council, the performance against those priorities, and how we resource both performance and priorities through the budget and wider through our other enabling strategies. With that, Chair, I'll pause and I'm happy to take any questions. Thank you.
Thank you for that, Neil. Any questions? Nigel Green.
Thank you very much, Chair. Thank you very much, Neil. On agenda page 13, there's a table showing the risk management table, and in the evaluation of the risk assessment, we have an initial risk and a current rating of the risk, and we have a target risk score. So in agenda page 13 and bullet point 2, my question is, for the target risk score, is there a time frame for that target?
Thank you, Nigel. Excellent question, and apologies, I should have mentioned that. So the target risk score is low. I think that's, to be honest, I think that's in some ways in the current climate, and the pandemic has impacted significantly, both in terms of demand and obviously the council's finances. I think we'd be looking at probably 24-25 financial year. There are some challenges within the council's budget, not least the uncertainty around government funding beyond March 23. We've got a longer term spending review, which gives us some sense of government funding going forwards, but we don't have a sense yet in terms of the allocations to individual local authorities. So we didn't get a multi-year settlement in December, which we would have hoped for. So there is some uncertainty there. Government have also indicated a potential redistribution of funding, so they're committed to looking at some of the data that underpins some of the allocations, and some of the data goes back way back to 2013 and beyond that. So they're committed to reviewing that, and there'll potentially be a redistribution. Wakefield could be exposed to a risk of that because we've enjoyed good housing and business rates growth. So there'll be a need to align resources and needs and things. And also there's some pieces of work that such as what I mentioned before. So we got capital prioritisation. Also, I'm keen that we look at a 10-year rolling capital pipeline, 10-year debt strategy, and 10-year rolling medium-term financial plan, where we can align all three together. And that piece of work is ongoing, but I think we'll really bring into this sort of coming financial year. I think the corporate plan, if that gets approved through Cabinet and Council, that will help as well in terms of that current rating, because it gives them some real clarity around those priorities and investment priorities, both through the revenue budget and capital programme. So I think in terms of your question, Nigel, I think 24-25 for me is a key financial year and an ambition where we want to get that risk ratings aligned, and I think there's some current work in track which could impact on that current rating over the coming 12 months and start to bring it more into line with that target risk. Hopefully that answers your question, Nigel.
Thank you. Thank you, Neil. The next question is Councillor Hames.
Thank you, Chair. Agenda page 10, 5.2, where you outline the risk. Is the risk any greater for the coming year than previous 2 or 3 years in view of what the council wants to achieve with the climate emergency?
Thank you, Councillor Hames. Not specifically, I think, around the climate emergency as such. I think there is a question around organisational capacity and resources to deliver the breadth of projects and works, etc., and meeting demand. We're seeing that at the moment, particularly in adult social care around Omicron and responses to that across the care sector and our own response. But wider than that, in terms of the breadth of the projects, regeneration projects and other initiatives that the council has in place, not least responding to government funding, towns funding, etc. And I think from memory on the work plan, there's a presentation on the organisational capacity and organisational resources. I think at the next meeting specifically. And I think this committee as well, we've had a discussion around how we recruit and retain people, and there's an item on today's agenda, I think, around that from memory. But there's nothing, obviously, delivery of our climate emergency, responding to that climate emergency by 2030 organisationally is going to take resources. We have that reflected into the revenue budget and into the capital programme. There's an argument those resources aren't sufficient, so we'll need to keep that in mind as we're looking at that programme of activity to enable us to meet that 2030 aspiration. Thank you.
Thank you.
Okay, Councillor Hames, right. Could I ask members to take down legacy hands if any more questions? Nigel Brooke.
Thank you. I thought the corporate plan, the 2-year corporate plan, sounded a really good idea, and I look forward to reading it. So well done with that. I've got 2 questions, if I may. The first is, given the degree of slippage we were talking about in the capital programme at the last meeting, I wondered whether the review that you've got planned should look at the reasons for the slippage and methods of controlling or reducing this. And the second question is, given the rising inflation in the national economy, the degree of control over rising costs is probably going to be more of a factor in the current year and the next year than usual. And I wondered about the absence of any mention of that in the report, whether you've got anything special planned for monitoring and controlling costs. Thank you.
No, good questions. Thank you, Nigel. In terms of slippage on the capital programme, it's not something we've specifically built into this review, but it is something that we are mindful of, and it aligns back to that previous point around organisational capacity to be able to deliver. But it's not just the capacity within the organisation, it's the capacity within supply chain as well. And I think it's around that there is a lot around the breadth of the projects that we have. And I know that we had a comment at the last meeting around the number of projects that are ongoing. But it's also around the, it's the capacity is, you've got to look at the two sides of the same coin in terms of the number of projects that we have, but also the capacity we have to deliver them and the complexity, and also as well those supply chains. And we are seeing supply chain difficulties and cost inflation things. So we do have, we've got a new major project board, which is initiated this month with the first meeting next week. And that's led by the corporate director for Communities, Environment and Climate Change, chairs that board meeting. And that's a meeting with Arcadis and Engie as one of our key partners, but with our corporate landlord team, our regeneration colleagues, etc. So we can keep a tight ring on those projects, identify any slippage, and look at things. So, and we already had arrangements in place, but given that some of the slippage and given some of the issues in the capital programme around inflation, etc., that we wanted to tighten the control environment there. So that comes into place next week, and we're hopeful that will make a difference. Your second point is aligned a little to that in terms of that inflationary element, and we are seeing cost escalations in the capital programme. We're also seeing it elsewhere, and we do monitor as part of our regular in-year monitoring and also robustness of the budget. So looking just from memory on the budget, I think it will cost us something like £15 million to stand still next year, and by standing still, that recognises the cost of inflation, and we've built in more next year's budget proposals in terms of energy inflation, as you'd expect. Excuse me, just coughing. But we've also had to take into account national insurance, employee contribution increases, and also increases in national living wage. Increases in national living wage is absolutely a good thing. Unfortunately, it doesn't come with funding from government to be able to match that. So it does cause us some budget pressures going forward into next year. So apologies if I didn't make clear in my previous comments, but we do monitor the impact of both changes in inflation of demand. So we look at cost variances, we look at activity variances, etc., as part of our in-year monitoring. Thank you.
Thank you for that. I think Nigel Green has another question for us.
Thank you very much, Chair. Not so much a question, more an observation. Neil, in the risk mitigation, there's no mention of staff training, and I'm sure, having worked in local authority for a long time, there's a lot of staff training on financial management done. So it's just an observation. There's nothing mentioned about staff training in budget management. Thank you.
No, thank you, Nigel. That's, yes, an omission there. So as part of the budget holder, we have training both for finance staff, but also training for service staff in terms of the breadth of their responsibilities. Anything from raising an order, compliance with financial procedure rules, compliance with contract procedure rules, but also the role of a budget holder, and right through from team managers up to corporate directors, etc. So yes, we do ongoing training, and I'm also mindful that we do training and awareness for members as well. So I think we've had SIPA supporting this committee in the past, and I know SIPA as well as supported overview and scrutiny in terms of their role in scrutinising the budget and finances. Thank you.
Councillor Hames, you have another question?
Thank you, Chair. On page 14, when you talk about robust financial control, does that include cutting out waste, or looking at ways of saving money, or can you give us an example? And I noticed that you in your plan controls to manage risk, there's an item there, lobbying the government for fully funding financial impact of COVID. Well, that's like looking at ways of getting extra money. Are we also looking at ways of saving money?
Thank you, Councillor Hames. Absolutely, we perpetually look at ways that we can be more efficient in council operations. If we look at the initial budget proposals that are on for cabinet, there's 5.1 million of savings from directorates, of which just over 4 million of those are around efficiencies, better ways of doing more for the same, or doing more for less, etc. Good example of that work. So LED street lighting, that will save significant amounts of monies every year, net after the financing costs. So that whilst that will cost us 21, I think, millions in terms of the capital investment, it will deliver year-on-year savings, which will more than offset that over the life of the scheme. We are also continually looking how we can exploit technology and digital. So the council's continuing to invest in its digital infrastructure, Microsoft 365, Teams, etc. Not only that, but enterprise resource applications and the whole environment. And we're looking at how we can exploit those opportunities in terms of process, procedures, and technology to reduce the cost base. So continually, we are looking at how we can reduce the costs within the council so that we can prioritise those resources to either deliver on budget savings as needed to meet budget gaps, or to prioritise those resources into delivery of frontline services to support our residents. Thank you.
Well, thanks very much, Neil.
Neil, I wonder if I could ask a question. You mentioned that we've got reserves of 15.4 million. Just to give us I don't know if you can answer this or not, but just to give us a broad idea of proportionate to our sort of programme spend, do we know, say within West Yorkshire, without identifying individual councils, how that roughly compares? Are we in a reasonable position compared to others, or poor position? Or?
I would say it's in some ways the comparisons are slightly old because of the pandemic and things. So just in terms of our reserves, so the council's reserves, so the general reserve is sat at 15.4 million. We have a balanced budget for this year, marginal underspend of 0.4 at the moment, so that will increase it to 15.8 come the end of the year. That's within our total revenue reserves. We started the year with around 175 million of total reserves. Some of that, so that includes the general reserve, which is unallocated. We also have ring-fenced reserves, and therefore held by schools, or ring-fenced for licensing, public health. We also have grants and contributions where government give us the cash, but it has to be spent over a multi-year period. And that includes some of the COVID fundings, like the COVID Outbreak Management Fund, where it has a multi-year spending plan. And we also have earmarked reserves, which include our financial resilience reserves, but also reserves to support specific projects and initiatives, etc. Through the which might be things like the Youth and Activities Fund things. One of the challenges that the council has, which will be articulated in the budget, is that we have a relatively healthy level of financial reserves, and you can see that in the SIPFA Resilience Index, which needs updating given the pandemic. But the last time that was published, the council was mid-packing, I think, as I've said it before to this committee. So we weren't red. So the SIPFA Resilience Index gives across a number of areas. It rates individual local authorities against other local authorities. So very much in response to your question, Jackie. So our reserves were relatively healthy. We were sort of towards the better end of the mid-pack. We had a significant risk around business rates because of the growth, and that was a significant red item and things. But I am mindful that the pandemic will have interfered with some of that, and we do get monies from government in year. The challenge that the council has is that we don't have a sustainable based budget at the moment, and that's the challenge that I mentioned to Nigel Green in terms of timescales for 24-25. The ambition is to get to that sustainable budget. The reason why I said we don't have a sustainable budget, looking at the initial budget proposals, they are supported by an additional 17 million of reserves next financial year, taking the total support to the budget to around 20 million, just short of 20 million pounds. Also, government consulting on changes to not only the prudential codes, which Mick will talk about later, but it's also launched a consultation which is due to end in February on minimum revenue provision, and the impact of that could well see some additional costs to the council from April 23 onwards in terms of how we use our capital receipts and how we apply minimum revenue provision against investment properties. So there's a challenge there. So in answer to your question, Jackie, our reserves are relatively healthy compared to others. We haven't got the most by any means of compared to other local authorities, but I'm comfortable with that level of reserves to be adequate. But we do have some significant challenges within the budget. And the key for the local authority, for Wakefield, and I think for one thing I'm keen to look on is how do we use those reserves on the investor save basis to invest in prevention, intervention, capital investment, etc., which will then have a longer term impact, positive impact on the council's budget going forwards. Thank you
For that, Neil. That's interesting. Thank you. And as I've got no more questions, I thank you again, and I'll hand back to Bradley.
That's great. Thank you, Chair. Thank you for that, Neil. So the remaining part of the paper is just to ask members if they are happy with the suggestion of the 2 assurance items to February. So they are the risk assurance items against the corporate risks on business continuity. And as Neil's alluded to through his presentation, interestingly on the risk relating to organisational priorities and capacity. Thank you, Chair.
Thank you. Can I take it, unless someone raises their hands, that we're happy with those risks? Yes, thank you. Okay, then, so the recommendations are set out in paragraph 3.1. So we've agreed that the suggested priority risks are set out in paragraph 5A, that is business continuity arrangements and organisational priorities and capacity. Thank you for that. So moving on to agenda item 7. This is the Financial Management Code update, pages 17 to 23. And the report provides an update on the Council's compliance with the code and its principles and standards. The Service Manager of Financial Management, Michael Wildman, will be introducing the report, and then we'll have questions. So, Michael.
Thank you, Chair. As you said, this report provides an update on the Council's compliance with the Financial Management Code and details the progress made towards complying with the underlying principles and standards. It's a bit of background for members. You'll probably remember that the committee's received a report in June, and the code establishes an approach based on 6 principles of good financial management, which are shown in 5.8, and there's a set of 17 standards that underpin these principles. And these are minimum standards that we as the council have to comply with in order to demonstrate our compliance with the code. The initial assessment in June that determined that 5 of the standards required minor to moderate improvements to ensure full compliance. And the report on page 20 under 5.11 shows progress made against those 5 standards. We're now showing full compliance in 4 of those 5 standards, with improvements required in just 1. So out of the 17 standards, we are now fully compliant in 16. And just to talk you through the actions taken during the year. So the council has moved towards quarterly reporting both financial and performance data. We've continued to extend our financial horizons beyond the current medium term of 4 years. This covers both revenue and capital spending plans, which is now extended to 10 years, and these are being reported through to CMT. And we now have a robust internal review of balance sheet items sponsored through the monthly financial performance group, as Neil alluded to earlier. And these are routinely reported through to Cabinet, such as collecting debt in terms of council tax and business rates, and in terms of reserves. The one area for improvement remains appraisals and business cases. So during the current budget process, business cases have been provided by services to support investment and growth decisions. And whilst these demonstrate the link between spend and outcomes, we still need to further develop these to ensure a standardised approach across all services. And secondly, to undertake post-completion reviews, so an assessment of results, benefits realised and outcomes of each of the decisions. And to inform this piece of work, I've commissioned a piece of work to look at the capital approval and monitoring framework, and that's expected to be completed early this calendar year. So for future years, as reported previously, there's no expectation of external monitoring, but compliance will be reported through Audit and Governance Committee. There will be a process of peer review across the region, and this will be implemented from next financial year 2022-23. And this will provide a further independent of the Council's compliance with the code. The committee has just asked to note the assurances arising from this self-evaluation and request that a further update be provided in a year's time. Happy to take any questions.
Thank you. Any questions, comments for Michael? Councillor Hames.
Thanks, Chair. I'm assuming that the FM code we're referring to is Wakefield Council's FM code, financial management code. In item 516, it says the FM code builds on elements of other SIPFA codes, such as the Prudential Code for Capital Finance. Is this about pigeonholing and putting accountancy in the right pigeonhole for where the money's been spent? And is that a legal requirement?
Well, there's a number of rules and regulations we adhere to, and some of those are the code, Treasury Management Code, Prudential Code, and this Financial Management Code is a SIPFA code, so it's something that's all councils will be reporting on, and it's to provide a standardised approach and make sure that you're providing good value for money in terms of financial management. So it's something that the council adopted, but it's a SIPFA code that we're adopting.
Thank you. Is there any is there any legal penalties if the reporting, the accounting reporting, is incorrect according to SIPFA coding?
No, the reason behind it is to ensure that we're meeting minimum standards. So, like I said, the reporting is through audit and governance committee, and there's no penalties, if you like, for not adhering to the standards. But it's something we need to bear in mind and push forward as part of our financial management strategy and make sure that we're providing excellent value for money.
Thanks a lot.
Nigel Green has a question or a comment.
Thank you very much, Chair. Thank you, Michael. On agenda page 21, section 5.13 and section 5.14, we talk about self-evaluation. So my question is, how do we calibrate self-evaluation?
Well, as part of the Financial Management Code, as I said, there's a number of principles and standards, and underneath those principles and standards are examples of what we should be doing to ensure compliance. So we assess what we do on a routine basis as part of the Financial Management Code and make sure that we're complying against those examples and make sure that we're ensuring that the council provides effective and efficient financial management.
Any more questions for Michael or comments? No? Okay. Well, thank you for the report, Michael, and it's good to see the progress on compliance that we're making. Subcommittee, the recommendations are set out in paragraph 3.1. Are these agreed? I'll take silence to mean that they are. Thank you very much. And with that, we can move on to agenda item 8, which provides a summary of the proposed changes to regulations which may arise as a result of the consultation on revisions to the SIPFA Prudential Code and the Treasury Management Code of Practice. This report can be found on pages 25 to 30. And again, Service Manager for Financial Management, Michael Wildman, will be introducing the report. Over to you, Michael.
Thank you, Chair. So this report provides a summary of the proposed changes to regulations to both the Prudential Code and the Treasury Management Code of Practice. So in September, SIPFA issued revised codes and guidance notes in a draft form and opened the latest consultation. And their proposal is for these changes to be implemented by April 2023. In essence, the changes provide clarification on two issues. Firstly, that councils must not borrow to invest primarily for financial return. And secondly, that it's not prudent for council to make any investment or spend decisions that will increase either the council's capital financing requirement, the CFR, or lead to new borrowing unless it's directly related to the functions of the council. And for service and commercial investments, there'll need to be an assessment of proportionality, so whether losses could be absorbed in budgets or reserves without significantly impacting on provision of local services. And this will measure through a new prudential indicator for net income from commercial and investment as a proportion to budgeted net revenues income. You'll see that in section 7, the government has also published a policy paper issued last July outlining the ways it feels that the current capital finance framework is failing and potential changes that could be made. It identifies that some authorities continue to engage in practices that push the boundaries of compliance and expose themselves to excessive risks. A consultation on the changes to capital framework, including MRP, was launched in November and will close early next month. Once again, implementation is set for 2023-24 financial year. So what's the potential impact on Wakefield, you may ask? So the council has invested 37 million in 5 non-operational assets during 18-19 and 2019-20 financial years. The strategy for investment had a pre-generation focus for investments within Wakefield district and intention to stimulate both regeneration and economic growth. These assets also generate income and currently provide a net £1.5 million to the council's annual budget. Currently, we don't provide MRP on these assets and earmark any future capital receipt to offset or repay the borrowing. Asset values are reviewed annually, as all investment assets are under the appropriate financial reporting standards. And should there be a reduction in the asset value, we will charge MRP to cover that loss. Should the council need to fully provide MRP, that's for all the 5 assets, this will reduce their net yield by around about £800,000 each year. The proposed changes also state where our plans identify a need to borrow. We need to review options for exiting these commercial investments. These options will include using the sale proceeds to repay debt or reduce new borrowing requirements. The potential consequence of this is that the council may not be able to take out any new borrowing, should a financial appraisal determine that the capital receipts may reasonably be realised from these investments. And it's assumed that this disinvestment and consequently the appraisals will be on a case-by-case basis. So we won't be looking at all 5 of the investments at one time, we'll just do it on an individual basis. We're currently working with corporate landlords to look at the individual appraisals for each of the 5 properties. And this report is provided for information guide and consideration by Audit and Governance Committee. And happy to take any questions.
Thank you, Michael. Any questions to Michael? Nigel Brooke.
Michael, this is a bit of a new area for me, and the new regulations, of course, will need to be tried in the courts if necessary. But reading it, if I understand it correctly, it's sort of giving a bit of a squeeze on these kind of investments to local authorities, and particularly trying to squeeze any investments not in your own area. Do you think this will constrain the opportunity to invest in any redevelopment opportunities within Wakefield district going forward?
The reason behind the review and the consultation is because I know Neil's aware that a lot of authorities have actually extended the commercial investment beyond the district, the boundaries of the district and the boundaries of the individual boroughs. So we've done it. We should be doing it is to assist in the regeneration and economic growth of Wakefield, and others have taken that beyond those boundaries. So I don't think it's going to impact essentially on what we've done in the past. Moving forward, we've got to ensure that we adhere to the principles underlying the consultation.
Okay, next I've got a question from Councillor Dagger.
Yeah, thank you, Chair.
Yeah, could I ask, Michael, what are the 5 commercial assets that the council do have? And under the current circumstances, are you still on track to, you know, the return of £1.5 million?
I know Neil will correct me if I'm wrong, but the income of £1.5 million has been built in the budget, and we're quite confident that money is still being achieved in terms of the rental income and the rental yield. To be perfectly honest, I can't remember all the 5 properties. I've got a list of them. Neil's aware of them. He can come in a minute. Do you want to pop in, Neil?
I can. Thanks, Mick. Thank you. So just to reiterate what Mick said, so yes, we invested in those properties. So we have a number of properties. I'll just try. So the Westgate Leisure Park is one. So that's where Cineworld, Pizza Hut, Nando's, etc. is. So a key area of the city, of the extended city centre. We also have a warehouse facility at Unit 41, which is currently occupied by Menzies, and I think it's next door to YPO. There's also a warehousing facility on Pedro Avenue, an office block going out on Denbydale Road, and also an office block on the Bradford Road going out to Wakefield, just before the police facility up there. As Mick's alluded, then yes, all the net yield is built into next year's budget at that £1.5 million things. Just if I can, Chair, just to so I have a meeting with our property colleagues next week around the investment properties and around the just re-looking at the finances versus capital receipts of those, etc. And as members would expect, it's a continual discussion that we have. So we look each year around the valuation of those properties, the market conditions, any offers we might have from third parties to purchase those properties, but also we look at the revenue yield as well, and changes to the code expect you to do that, and it's something that we do anyway, as you'd expect in good financial management. I think the one thing I would just end my comments on is that local authorities have for a long time held non-operational assets, whether that be farmland, farms, offices, shops on high streets, ground rents. We hold as an authority, I think, 1,500 plus assets, things. So it's not a new thing that the authorities have invested in non-operational assets. I think, as Mick alluded to, the issue has that some local authorities have perhaps gone beyond the boundaries of what might be called reasonable in terms of both the geography of those investments, but also the scale of those investments versus their net revenue budget. In terms of our investment income and servicing the debt, etc., we've obviously looked at that in proportion to the council's budget. If we were to have a void period, for example, would that impact on, etc.? And we have some reserves in terms of being able to call upon if we do have those void periods, etc., and things. I think shall we say, some of the practices by other local authorities have forced government and the Chartered Institute of Public Finance and Accountancy to perhaps tighten the codes to halt some of the activities that others have done. Going forwards, I have to give a annual certification that there's nothing in our capital programme which constitutes investment solely for yield, and that anything that we do is in line with our statutory duties, for example, regeneration of the district. Thank you, Chair.
Thank you, Neil. I've got Councillor Shaw next.
Thanks, Jackie. Apologies for being late. It's one of those technical issues. it's really a quick one, but it's under 6.1. I know Mick and yourself, Neil, have touched on this. It's this wording where it says related to the functions of the local authority. That seems, it can seem to be sort of retrospective, but it can also seem to be sort of broad and linking to regen, economic growth. And you've already discussed and said that councils do have a number of investments in things in their areas to already comply with that sort of thing. But I just wondered going forward whether it will constrain councils from a regeneration and economic growth by bringing this in.
Thanks. If it's okay, Mick, I'll respond. I think potentially it will certainly. I mean, compliance with guidance, statutory guidance, is a discussion that I will have to have then with the monitoring officer, chief legal officer, etc. So we both would need to be absolutely assured that any proposal is in line with our statutory duties, in line with the guidance, etc. It's not necessarily pure. It's not a pure financial or accounting, and there are grey areas. There are grey areas. So, for example, if you are looking to purchase a property in terms of accumulating land, for example, as bringing together land in terms of a longer-term regeneration project, which might take a number of years to come into fruition. But in the meantime, you might want to hold that asset and run that asset for a number of years. So I think what it means to me is that we have to be absolutely clear, as all local authorities at the outset, what's the problem? Why are we doing this? What's the intervention, what's the exit strategy, etc., and things. And going through, I think the one thing that the guidance tells is, go through that thought process, etc. We have to provide those assurances to elected members as officers, and then if called upon, we would have to give those assurances as well to such as SIPA or government if called into account. Wakefield isn't one of those local authorities who are named in any of the issues or highlighted by government, etc. and things. But yes, it will cause us, Les, to just say, right then, let's be clear. What we're doing this? Why are we doing this? What's the ultimate aim and plan? And how will we know? So it aligns very much to that work that we're looking at capital framework around benefits realisation, monitoring of outcomes, etc., and being really clear at the outset of a project what we're hoping to achieve and how does that project align to our corporate plan and priorities for the district, not just in next month, 6 months, but also in a much longer term time frame. Thank you.
Thanks, Chair. Just one quick comment on that, and I think Neil knows. I think you've highlighted there what the process was in buying the 5 things that were initially bought, which gives me a sense of comfort. Thanks for that.
Ironically, Les, some of the things, as you would expect when we purchase and invest any public money, we have due diligence, financial due diligence, property due diligence, legal due diligence, etc. And some of the things that we put in place to ensure the safeguarding of those public monies, i.e. the strength of the lease arrangement, the quality of the covenant of the lessor, the lease strength in place, etc., are some of the things articulated in some of the underpinning guidance that shows it's an investment property rather than a regeneration scheme and things. So it almost encourages local authorities to go into riskier ventures than you would have otherwise done. Things that's possibly an unintended consequence, and but it more aligns to a regeneration where you're perhaps taking more risk than you would have done when we've purchased, for example, these 5 assets. Thank you, Les.
Thank you, Neil. I've got another question from Councillor Hames.
Thanks, Chair. I did put my hand up earlier, and then Councillor Dagger asked the question I was going to ask. But on the five businesses, commercial properties that you bought, do all of them contribute to the 1.5 million budget, or is the 1.5 million budget just coming from one or two of them?
Each asset positively contributes a net yield, Councillor Hames. So there's not one that's running at a loss, which is then subsidised by the others. Each one of them is contributing into there. We did, I think, we did have a hiccup, shall we say, in the pandemic, where we had a slight reduction in the value of one. And in line with our policy, we put in place what's called a voluntary repayment, so a VRP rather than MRP, and that was disclosed in our accounts and disclosed in our outturn reporting, etc. But actually, that was basically at the height of the pandemic, when at a point in time, actually looking at the valuations now. Not only are they contributing in terms of revenue, but we're seeing some appreciation in some of the value, so in terms of capital as well. So I think there are at least one asset where the council has been offered more monies than we purchased it for.
Can I just ask one other thing? If you've got an organisational property, such as a school that ceases to be a school, or some office building that ceases to be office buildings used by local authority, does that then get classified as a commercial property and get added to this list?
Schools are slightly different, Councillor Haynes, in terms of the Secretary of State for Department for Education would need to would have a view, etc. But in terms of any office, and as you'd expect, we are looking at our operational accommodation now coming out of the pandemic, and how efficiencies we can make through that use, given the increased home working, hybrid working, etc. So there is a piece of work which corporate landlord colleagues are picking up in terms of the efficient use of our operational assets anyway. If an operational asset is not needed anymore, it's classed as non-operational. It doesn't mean it becomes commercial, it becomes non-operational, and then could be subject to disposal. Or it could be that we work with other partners, could be statutory partners such as health or others, who might want to take up some place in one of our buildings, which brings with it not only an income stream, but also opportunities for greater collaboration, integration, etc. across, particularly, for example, adult social care and health will be a good example. So we continually looking at those. Our corporate landlord colleagues are continually having discussions and looking at how best we use our operational estate. And if a building is surplus to requirements, then it classes non-operational and earmarked for disposal. And we have a routine series of asset disposals, which then generate capital receipts, which can then be used to fund the capital programme. Thank you.
Nicol.
Well, if I have no more questions, I'll just thank Michael and Neil for that. And it is reassuring to know that those 5 assets are all contributing positively. So thank you for that. If we move on then to agenda item number 9. This is to consider the annual audit letter issued by the Council's external auditor, Deloitte, for the 2019/2020 financial year. And the report can be found on pages 31 to 49. Neil Warren, Chief Financial Officer, will introduce the report before handing over to Nicol Wright from Deloitte. Neil, could you please introduce the report for us?
Thank you, Chair. And Colette extends her apologies. She's unfortunately not in the office today. I'm sure that members have heard enough of me so far today this morning already. So, and I think actually, Chair, you covered that the introduction in your introduction. So I'm more than happy to hand over to Nicola, who's on the call anyway, who can talk members through the detail of the letter and the attachment. Thank you, Chair.
That's fine. Nicola?
Thank you. Hello, everybody. So this report dates back to the 1920 accounts, which feels like quite a while ago now when you reflect on it. So you'll remember there were some delays to us issuing our audit opinion, and that was signed back in September of last year. Following conclusion of the work on the financial statements, there are then some procedures that we need to complete. So there's a return that we issue to the National Audit Office that they use for their production of the whole of government accounts. And once we've completed that piece of work, that allows us to issue our certificate. And the certificate is the document that the audit for 1920 is formally closed. So once that's done, we're then required under the code to issue what's called an annual audit letter, which is this document here. So what the annual audit letter does is it simply brings together all of the work that has been done on that financial year into one place and provides that as a summary for anybody that's got a particular interest. So what this annual audit letter does is bring together those matters that we've already discussed with the committee over the last sort of 18 months, 2 years. So I wasn't proposing to go through any of the detail because I'm very conscious that you've probably heard it before and it might just be a bit too much detail. But what I did just want to touch on was clearly we are working on the 2021 audit. And a couple of the matters within this letter actually are relevant to the 2021 audit. So the first is the value for money except for qualification that was linked to children's services. So you'll remember that's been in the accounts for a couple of years now, but obviously the council has recently had a revised visit and a revised inspection report. So one of the things that we're just doing in terms of the 2021 opinion is just making sure that we're looking at that and building that into that work, because clearly in light of the outcome, we won't need to make any further qualifications. The regime has changed slightly, so we don't qualify anymore. We have significant weaknesses that we report, but we'll be building that into the work that we're doing currently. And secondly, just to say that there were a number of unadjusted errors related to the pensions balance, which is an area of focus for us as auditors because it is an area of judgment and that's quite complex. And in terms of the 2021 balance, there has been some adjustments made at the pension fund that will flow through into the accounts of the council. So there's been some additional work done by the actuaries on the back of the adjustments that have been made in the fund accounts, and that is going to lead to an adjustment in the council's account, which is currently being processed by Colette, which I'm sure if she was here, she would want to touch on. So this letter is closing down the 2019-20 work, and there are a couple of implications that we're currently focusing on for the 2021 audit opinion. So I will pause there and obviously be very happy to take any questions.
Thank you very much, Nicola. Any questions or comments for Nicola? Councillor Hames.
At this stage, can you indicate whether the alterations in that judgmental report on the pensions will be to the benefit of the council or to the disadvantage of the council?
I'll probably refer that to Neil because we haven't seen the revised set of accounts quite yet.
It's an increase in the assets of the pension fund, which will flow through to an increase or reduction in the liability of the pension fund in the council's account. So it's to the good for us, Councillor Hames. Unfortunately, I think from memory it's around 13 million to the good, but don't quote me on that one. Unfortunately, though, it doesn't mean extra. It's not extra monies to spend. It's an accounting adjustment in the accounts more than anything. So whilst it's proper that it's reflected in the statements of accounts and the most up to date, it doesn't mean that we've got more monies to spend and things. So it's a technical adjustment. And I would note that if we'd have actually signed off our accounts in line with the deadline, we wouldn't have made the adjustment anyway, because we would have already moved on from that. So it's actually some fortunate that we hadn't and things. I'd just like to say, just in terms of Nicola's comment around the value for money aspect, what would have slight change in the word in terms of significant weaknesses, etc. Really positive, and we're really pleased, obviously, to receive that revised judgment from Ofsted in terms of children's services, in terms of when we've gone from inadequate to good with outstanding leadership. So that's really positive, and thank you to Nicola that we can reflect that in our 2021 audit opinion as well and things. So I think that's really good. and hopefully puts behind us then that 3 years of inadequate judgment and reflection in our statement of accounts opinions. So excellent news, thank you.
Thanks for that, Neil.
Any more questions for Nicola? Nigel Green.
Sorry, Chair, it's not a question for Nicola. It's an issue for our committee. But on page 42 of the agenda item, towards the bottom, where we're talking about key issues from work performed on the statement of accounts, it says the performance reflects well on the professionalism of the finance staff and their commitment to maintaining high-level controls over financial systems. I just wonder if we ought to recognise that, even by way through Neil of saying thank you to the staff. Quite often these sort of throwaway lines get missed, and as people know, I've worked in local authorities for a long time. It's nice for the staff to know that we have recognised that as well. So I would just ask if we as a committee could, through Neil, pass our thanks on. Thank you.
Thank you for raising that, Nigel. I think that's a very good point. And yes, if you would pass on our thanks, Neil, perhaps if we can also make sure that that is in the minutes, that the committee noted the performance of staff and send their appreciation.
Of course I will, and much appreciated. Thank you, members. Thank you.
So no more comments? Okay, thank you. Thank you very much, Nicola. And we're delighted that you can take account of the new Ofsted ruling. So that's terrific. Thank you very much. Okay, so if committee are happy with that, our recommendation is to note the annual audit letter 2019/20. Thank you very much. Moving on to agenda item 10. It's an assurance report on the actions taken and planned. I'm sorry, I'm getting some feedback. To respond to some specific recruitment needs within the council. This report can be found on pages 51 to 56. Jill Clayton, Service Director, Human Resources and Organisational Development, will be introducing the report. So I'll hand it over to Jill.
Thank you, Chair. You've got the report in front of you then. What I don't intend to do is to read through the report, but to pick out the main bones of the report and then obviously take any questions from yourselves if that's okay. So we're currently having difficulty filling certain roles within the council. These include, but are not exhaustive, adult care workers, planners, legal advisors, some admin staff, etc. I just want to say as well that this situation is not unique to Wakefield Council. Other councils throughout the country are having the same issues as well, and for the same kind of roles. So it's not something that's just Wakefield that people don't want to come and work for us. It is a nationwide issue at the moment. So obviously what we've done is we've looked at what the issues are and we've tried to come up with some actions that will help us to recruit people in these roles so that the council can continue to provide services to the public of Wakefield. So there's some very detailed information within the report, but what I thought I'd do is split it into 4 categories. So there's 4 categories really that we've addressed. So if I go through each of those, so the first one really is resource. So we have put some extra resource in HR to support how we develop specific materials for attracting candidates so that they do want to come and work for Wakefield. We've looked at speeding up recruitment so that it avoids giving back word. If I give an example, children, social workers, with all the checks that we have to do, the reference checks, the DBS checks, etc., it can take a while. And managers doing that alongside their job, sometimes it does drift a little bit. So what they've done is they've funded additional post so that we've got someone that's works on that all the time. So what we do is when we offer someone the role, we move it as quickly as we can so that they don't think, oh, I've had another offer from Leeds, I'll move across there. So there's extra resource being put in for that, and that's worked quite well. And we have got quite a lot of people on board through that process. So first one was resource. The second one is policies and procedures, and it's about making sure that we have got the right policies and procedures in place to help us recruit and retain really good staff. So we revised the recruitment and selection policy as well. that advises managers around how to recruit successfully, how to get the right people to undertake the role that you're advertising. We also introduced a probationary policy that ensures employees are supported and developed so that they can do the job as well. And if there's issues that they're struggling with, we can make sure that we do provide the relevant guidance so that they can provide a really good service. We've also introduced a market rates policy, and that enables us to pay recruitment and retention payments to difficult to fill roles. The time that we used it most recently was in children's social work when the Ofsted report wasn't good. And what we did is we introduced a recruitment and retention bonus that was paid to staff. That worked really well, and we did recruit a lot of staff by having that in place as well. Category 3 is about learning and development, and it's about how we develop people so that they do feel that they are valued within the organisation. So we've developed career graded roles. So for instance, if Neil in his area were wanting a fully qualified accountant, and we were struggling to fill that role and it was at a certain higher level, what we might do is say if it was a grade 10, we might advertise a grade 7 to 10, where you don't have to be qualified at the beginning, but we put in place the qualification so that we can grow them into that role, and we pay for those qualifications through the apprentice levy as well. They are really, really popular, and we've introduced those across the council, not in just the difficult to fill roles as well, but have proved to be really successful. The use of the apprentice levy and setting on the apprentices. So the apprentices I'm talking about now are the ones that usually come after leaving school, etc. We've got more than 80 subjects that people can do on in that, so it's growing our own. That's really successful. And we also use the apprentice levy to develop our existing staff as well, so that we get them ready for the next level on as well. So not only does it help us get them ready and move on to the next level, but it motivates the staff as well, and that is quite successful. The fourth category is about being an employer of choice. So what makes Wakefield stand out above the, why would we want to go to work for Wakefield rather than one of the other councils as well? So it's around looking about how we attract people to come to work for Wakefield. It's about having supportive people policies. We've got a carers policy that we introduced not too long ago. We've just introduced the flexible working policy as well. And that allows us to recruit from a much wider area as well. And that is, most councils are introducing them as well, but it is working quite well, and people, when they're ringing up around roles, do ask about flexible working. So they're the 4 areas, but moving forward, we're also wanting to do some additional work as well. So we want to find simpler ways to apply. At the moment, we've got one application form for the council, and we're wanting to simplify that. If you're applying for a role that doesn't require you to have professional qualifications, etc., but just skills in a particular role, there's nothing more demotivating than having to go through this, can't fill that bit in, can't fill that bit in. So why do we have it there in the first place? So let's make a really, really simple one so that it doesn't put people off applying as well. So that's something that we're working on at the moment. Developing booklets around difficult to fill roles as well, so that we can take those to universities. So what it does is it talks about, this is the kind of roles that we offer, say for instance in legal, and this is what you can expect from us, this is the development you'll get, this is the support, etc. And then setting up some groups with managers from the difficult to fill kind of roles and areas where we can get them to share experiences, what actions that they've put in place, what worked, what didn't, so that they can act as a sounding board for each other as well. So lots of work going on, lots of work planned, and hopefully it will still allow us to recruit to the difficult to fill roles that we've currently got. So any questions?
Councillor Dagger.
Yeah, thank you, Chair, and thank you, Jill. Just on your third point, really, and grow your own apprenticeships. If you're growing your own and you're investing in apprenticeships, how will you then, after you've spent all this money and all this effort in, growing your own people, how will you then retain them? How will you then retain them people?
I think that takes me on to the fourth point that I mentioned. It's about being an employer of choice, and it's about treating people with dignity and respect, making sure that even though we've grown them and we've developed them, we continue to develop them as well. So it's not you do one qualification and that's it, but it's about making sure that it's continuous development for them as well. That we are an employer of choice and that we do have good people policies, that we do treat our people well, and it is a place that people feel comfortable and want to work in as well. I think some people will move on, and I think that's natural, and I think that is healthy for an organisation as well. And if we do look at most of our apprenticeships, most of them do stay with the council for a considerable period of time as well. So I think it's about building on what we've currently got and being somewhere that people want to work.
Yeah, could I just say, Chair, thanks for that, Jill, and can I just comment really on the report? I do welcome this report, because it does recognise that there is a resource issue within the council. You know, I think there is things in this report to mitigate that. So thank you for your report, Jill.
Thank you.
Councillor Garbett.
Unfortunately, Mr. Dagger, Councillor Dagger's asked the question much better than I were going to do. It was about retainment, so I'll have to concede.
That's fine, thank you. Well, Nigel Brooke has a question for us.
Thank you, Chair. Just on the apprentices point, congratulations on winning that Apprenticeship National Large Employer of the Year award. I think that takes some doing, and I would say, having worked for a neighbouring organisation, we knew that the council was good at apprenticeships, and that's a recognition of that. Well done. And I've worked with some directors who started as trainees. They weren't called apprentices in those days, but and came right the way through to being directors. So I know it works, and you don't have to just recruit people after graduation. Sometimes you can get bright individuals further. So I'm glad to see you do that. My question is, well, it's more of a comment really. On the paragraph 7475 area, I saw the point about a simplified application form for the simpler sort of jobs, but I know that some of the private sector applicants to the public sector are put off by public sector application forms, and I found that allowing people to apply using the CV initially, and then at shortlisting stage completing such necessary parts of an application form as are really needed, help to get people in from the private sector into the field. Otherwise you tend to have only public sector people applying. So it might be something you could consider. And another thing I found helpful was providing a link person, the phone number to talk to when advertising, because sometimes people they see the name of the role, but they don't really know if it means them, particularly if they're from an organisation that's quite different. So giving somebody that can ring up and say, does this mean this kind of job? And be able to talk about the organisation, the role, the kind of people who work there, the prospects, gives them a much greater chance of them applying, particularly if you pick the right person to put on the adverts. I wouldn't recommend using anybody, but if you pick the right people, you get effectively an endorsement of your advert. So those were just two suggestions. Thank you.
Can I just say, I think they're two really good suggestions, and the bit about the application form and the higher level roles, I think is something that we do need to seriously look at. Yeah, the more we can widen our pool of applicants, the better it is. So thank you very much.
Yes, thank you for that. And before I bring in Councillor Mitchell with her question, if I could just comment on the application form as well, because I think that is a really good idea to have a simplified version, because there are some posts that don't require high level literacy skills, but actually sometimes there's a literacy barrier to get through before you can apply for the job. So really support that. I think it's good. But Councillor Mitchell has a question.
Thank you, Chair. I just want to say, Jill, I wholeheartedly support this notion of growing your own and bringing people in and training them up. Like Nigel, I'm old enough to remember pretty much every boss I had started to work at 14 and scrambled the way up and were very good. You know, in those days that used to happen, and I'm very pleased to see you thinking of doing it. You're trying to operate in the same way. I know retention is important, but even if you don't get to keep people, you'll have started them on a road where they can probably progress somewhere, and for the greater good of the district, it'll benefit enormously. So I think it's a win-win all around. Yeah, I think application forms should be easier and less off-putting. That idea of Nigel's have a phone number you could ring if you're not sure if it apply, if you should apply or not. Equally good idea. But overall, I'm very pleased that. So well done, Jill.
Thank you.
Councillor Shaw.
Yeah, thanks, Chair. Just reading this report, Jill, and looking at it, sort of brought me back to what's happening in the private sector and how that's grown. And it's interesting that the private sector a number of years ago had similar sort of problems in competition for different groups of workers. And this document is really well structured. But what I'm really pleased about is the council are actually doing it. It's not just a document. It's not just on the ground. They're actually doing it. Looking at some of the apprenticeship schemes right across there. The only suggestion I'd make, and it is about recruitment, retention, and self-growth. But the only sort of observation I'd make is that people, when they read the word apprentice, it takes you to an apprentice that's either just left school, college, or whatever, and it doesn't really show some of the apprenticeships that we're offering. I know we're offering engineers, we're offering youth work, legal advisors, the lot, and I just sometimes wondered if, as well as the word apprentice, we do really specify what's on offer there, because it's important that people look at the public sector like they look at the private sector. But overall, I think it shows that we're doing the right sort of things. Without there, it's not going to be easy, because I suspect that every council's doing the right sort of things now, Jill. But keep up the good work is what I would say. Thanks.
Thank you. Councillor Hames.
Thanks, Chair. On this subject of training, you highlight that one of the areas where you have difficulty getting recruiting people is planning, and it's an area that I seem to get involved in quite a lot. Planning is one of the areas where training is something that could benefit the council by bringing up your own chief planning officers. Yet over the past few years, we've actually had to appoint from elsewhere for a chief planning officer, and I noticed that from a value for money point of view, the previous planning officer were in charge of highways and the Wakefield East bypass, but now we appear to have a chief planning officer and another chief officer dealing with future infrastructure for ring roads, and I'm just a bit concerned that are we going down a road where we're going to split responsibilities and need to employ more senior people, or are we going to be able to get more value for money by people taking on more responsibility?
I think all I can say really on that is whenever roles become available, the managers that are in charge of recruiting to those roles do look to see what the best way to fill those roles is. So managers do look at everything before they actually go out to recruitment, and then do try to recruit to them in the way that is right at that time. But I can make sure that I do feed your comments back to the managers involved in that area.
Can I just comment on that, Jill? Because looking back from my history and recollection of the council, I think those roles, to my knowledge, have been split for a long time. The highways service director and the planning one.
I'm not sure about that. I'd have to look into that.
Yeah.
I'll speak to the relevant managers and pass those comments on.
I think they have been separate for some time, Councillor Hames, but we'll check that out for you.
Well, I don't know. I don't know that the I don't know that the chief planning officer during the time of the building of the eastern bypass around Wakefield was the project manager. The chief planning officer was the project manager for that project.
Right, okay, maybe something to do with that project. But anyway, thank you for your question. And we've got Councillor Dagger.
Yeah, thank you, Chair. Just a comment on, if I may, on something that Les brought up about apprenticeships. And I think Les is quite right about apprenticeships. And I think we tend to think of apprenticeships, you know, as probably when we had our apprenticeships, Les and I, that it's just about young people. However, these days, I understand, and I'm sure Jill will correct me if I'm not correct, but apprenticeships are open age now. And I think in this council, we have some apprentices in the 50s, people that's been redeployed.
Which is great, because that means that people get retrained and they've got the opportunity to retrain and go on and add value to the organisation. So, yeah, that's good. I don't think I've got any more questions. I think Councillor Garbett is yours, the legacy hand. Oh, Nigel Green has a question.
Thank you, Chair. Without wishing to add to the age profile of the committee, I can remember when the council's apprentices were called Smarties.
Yes, I do too.
And I'm sure there's probably some employees of the council who were Smarties who are now in senior positions. My question, Jill, was, do we, as a council, record and monitor the time to fill a vacancy from a person handing in their notice to that post being filled? And do we sort of monitor those to see if there's any hot spots where it's taking longer to fill vacancies in one functional area compared to another?
We don't monitor it for all roles. No, we don't. We can do if we want, so that it's all recorded because it's an electronic system that we use for recruitment. So we could do that. But sometimes there are good reasons as to why it's taken a long time as well. A manager might not want to push it as quickly as he would. If we are concerned that there are issues around how long it's taking to recruit, and I think I mentioned earlier, we got a bit of a lag on children's social work recruitment. So we put some additional resource in there to make sure that we speeded it up. So if we are aware of any lags, we do look at it, but we don't do it as a matter of course.
Could I ask a question, please, Jill? I note that ongoing and future actions you have down to continue to use recruitment data to analyse diversity and inclusion. And clearly, I think that is a piece of work that we need to do. And I think it's really important that we look at diversity and inclusion in relation to recruitment. And I wondered, have you had chance yet to use any of that data, or is it too soon to give any examples that have come from it?
Yeah, it is too soon at this moment in time, but that data, we need to make sure that we make really good use of it and get out into the communities for underrepresented groups as well, and that's our aim. But it is a little bit too soon to say if it's made any difference at this moment in time.
Okay, it would be nice to know, even if informally, that when that is done, what difference it is making, because I do think that it's important that we address that one. Nigel Green.
Yes, just something you mentioned there on diversity and inclusion. Do we include geography? So that do we know that the communities of Wakefield, from sort of, you know, Middlestown at one side to Upton at the other side, are actually equally represented in the workforce?
That's a really interesting point. That it is information that we hold, because again, like I said earlier, it is an electronic system, so we do keep that information, but it's not something that we use to determine who's underrepresented. But I think that's a really interesting point. That's something that we could look at. because it would help us to add areas of deprivation, etc. If we've got people not applying for those areas and what we could do about that. No, that's a really good point.
That's what I was thinking. If for some unknown reason, people of Hemsworth, Upton, I live in Hemsworth, aren't applying, is there some barrier to stopping them applying? Which may well be the things we've discussed before about the complexity of application forms. How do they see whether they're post-advertised and all those sort of things? So yeah, thank you for that.
It might be to do with transport links. There's lots of reasons, aren't there? Yeah. Okay. So is that it for questions and comments? So just to say thank you very much, Jill. I think you can see the committee welcomed that report, and there's lots of good actions there that are taken to improve recruitment processes. So pleased to see that. Thank you very much.
I'm sorry, Chair. I'm going to have to leave the meeting. Thanks.
Okay. All right, Councillor Shaw. Thank you.
Thanks. Bye.
Thank you.
Right, so the committee are asked therefore then to note the assurances in respect of the council's recruitment initiatives and actions, and the direction being taken to make the council the employer of choice to attract our workforce of the future. All agreed? Yep. Thank you. That takes us to agenda item 11, which is the Governance Action Plan. Robert Parker, Governance Service Manager, is attending today's meeting to present the report, which can be found on pages 57 to 71. So, Robert.
Thank you, Chair. Good morning, everybody. The purpose of this report is to provide an update on the actions within the Governance Action Plan, and which were identified in the annual governance statement where improvement work is ongoing or where assurance reports were required. Members will recall that the annual governance statement and associated action plan was approved by committee at its meeting on the 13th of September.
Can you go, baby?
It's also worth mentioning that alongside the annual governance statement and the governance action plan, considerations also been given to the lessons learned from recent public interest reports and government interventions elsewhere in the country. A paper titled The Review of Governance Arrangements in Light of Lessons from Elsewhere was presented to the
offices of a leading fashion designer. In return for expediting this, the Prime Minister assured that he would take a look at his idea for the Great Exhibition Festival. So, Mr. Speaker, we have a new term in...
Is someone not on mute? There's a background noise. Thank you.
Thank you. Sorry, a paper titled Review of Governance Arrangements in the Light of Lessons from Elsewhere was presented to the Audit and Governance Committee meeting held on the 14th of June and is referenced as a background paper to this report. The purpose of the Governance Action Plan is to enable the Audit and Governance Committee to monitor those issues identified within the annual governance statement where improvement work's ongoing and where assurance reports are required. In addition, the actions are monitored by Gillian Marshall and now myself throughout the year with support from Mark, the Scrutiny and Political Support Manager, consultation with action owners and with periodic updates provided to this committee. The latest update, the action plans attached as an appendix to the report. Members will see that progress is being made to address all issues identified in the action plan. The action plan is colour-coded to assist members in quickly identifying which milestones have been completed to date, alongside those actions that are on track to meet agreed timescales. For those items which are on track but not yet completed, a progress update is included in red text. I think furthermore, the action plan shows where and how actions are to be monitored, for example, assurance reports and other updates brought to this committee and included within the work programme. Agenda items number 7 and 10 of today's meeting are two good examples of that taking place. There's 10 actions within the action plan, and members will have seen the updates provided in red text, therefore I wasn't intending to go through them. In summary, 5 are expected to meet timescales and 5 are ongoing. The recommendation of the report is that the updated governance action plan be noted and a further update provided to the April meeting of the committee. Before I take any questions, I'd like to hand over to Andrew Lancashire, the Service Director for Education and Inclusion. And Andrew is going to provide a specific update on the action relating to the Children's Services Improvement Plan. Thank you, Andrew.
Thanks, Robert. Good morning, everybody. So as elected members will be aware, Children's Services was re-inspected again in November 2021. Period of time, obviously, since the previous inspection in the summer of 2018, when services were judged inadequate in all aspects. Really pleased to update all the members that Children's Services are now good. Our overall effectiveness is good, and indeed our leadership and management, the impact of leaders on social work practice with children and families is now outstanding, which is a real accolade, I think, for all of the team managers, service managers, heads of service, etc., involved in that part of the judgment. So that means specifically that in the other two judgments that we have, experiences and progress of children who need help and protection is now good, and the experiences and progress of children in care and our care leavers is now good. Couple of sort of few comments in terms of things that were highlighted within the report, and if you go on the there is a link on the council intranet, I believe, to the actual report itself, a little infographic video in terms of some comments. But some of the things that they said is that services for children are of good quality and are significantly improved from when we were last inspected in 2018. Children are at the centre of all practice. Disabled children receive a responsive service that is focused on their needs. It's an environment where good and effective social work is flourishing. People want to come and work for Wakefield, which builds on the comments that Jill was just making previously. The emotional and mental health of children is a high priority. We've got very strong and effective partnerships with key partners in health and the police, and the impact that has on young people. And I think we were really pleased with the fact that our team was recognised as being tenacious, skilled, thoughtful and strongly committed, and I think that's an absolute step change from where we previously were. Importantly, safeguarding and all of the routines and procedures around that is robust, and there's a clear vision for the work of the virtual school, and that's part of my business, which deals with all our educational progress of children in care. So we were really pleased. A couple of items to improve, both of which we are aware of, and that was recognised in the report, to make sure that the legacy work around some of our vulnerable care leavers, that the assessment of and response to risk for them is really well developed, and we're a piece of work ongoing with that. And then the quality of children's written plans to ensure that they include the details of the interventions being provided to children and families. And again, that was commented on the report as that this wasn't impacting on the outcomes for young people, and it was indeed, as I said, something that we were aware of. So we're really pleased. I think there's only us and two other authorities that have managed to do this in this time frame, to move from inadequate to good. And so it's nice for I think us, as we already did do, but to have it confirmed externally of how proud we are to work for Wakefield. So I'll pause at that point and any comments or questions that people have.
Thank you, Andy. And before I take comments or questions, I'd just like to, on behalf of Audit and Governance Committee, congratulate you, of course, Beate Wagner, Victoria Schofield, and all the staff that have been on this journey. And it has been an absolutely remarkable journey that's culminated in this fantastic report. It's just exceptional, and obviously we're all delighted. And personally, I'd also like to congratulate the Cabinet Member for Children and Young People, Margaret Isherwood, for her political leadership, and also the role that Overview and Scrutiny played, chaired by Councillor David Jones. As I said, everyone has played a role, and it's just fabulous news, but it's also at the end of the day, it's also the great outcomes that it's going to bring for our children, which is important. So thank you all very, very much indeed. And I will see if you've got any questions or comments. Councillor Dagger.
Yeah, thank you, Chair, and thank you for that report, Andrew. Yeah, just to reiterate what the Chair said, really, it's been some 3-year journey to move from a position of, can I say, inadequate to good. And again, can I add, you know, my thanks to all the staff and everyone that's been involved on this 3-year journey. And my question is now, you know, now we've got to good, I'm sure you won't be sitting back on your laurels. How do we maintain that standard?
Yeah, I think that's a really good question, David, and one that we're actually looking at the moment. So hopefully we will be able to come back and say this is, if you like, the plan to move forward towards whenever the next inspection would be, probably 3 years down the track. So certainly it's about maintaining the good judgment, but also then improving the services that we've got. You know, ideally we'd love to be an outstanding authority across the board, so it's about maintaining that commitment. I think just going back to Jackie's point at the beginning as well, I think Ofsted recognised the political leadership, they recognised the investment that the council put into children's services, which they saw as being really radically important in terms of us being able to make the seismic changes that we've made. So absolutely really good question, and I think we'll certainly be happy to come back to the committee and say, you know, a couple of months or so, this is the direction of travel. This is where we've refreshed the children and young people's plan, and where we see ourselves moving forward.
Thank you.
Sorry, I just couldn't come off mute there. Yes, that would be good for you to come back and let us see how things are moving forward. But have I got any more comments or questions for Andy? No, appears not. But again, Andy, just thank you so much, and congratulations to the wider team.
I will make sure I pass. Yeah, so. I'll pass all that on, and thanks for the positive feedback. Okay,
thank you very much for the hard work. Thank you.
Yes, thanks a lot. Bye-bye.
Okay, all right. So with that, committee is asked to note the updated action plan, which will be presented to committee once again in April. All happy with that? Yeah. Okay, so agenda item 12 is the final item on today's agenda, and it's the committee's work programme for the remainder of 2021/22 municipal year. The work programme can be found on pages 73 to 78. The work programme remains, as you know, a live document, retaining a degree of flexibility to add or remove items as appropriate. The Governance Action Plan update has been added to the April meeting. Are members happy with the work programme for February and April meetings, or do you have any comments? Nigel Brooke.
I'm just conscious that the corporate plan was mentioned earlier and wondered whether that could be added to the February agenda so we can see it.
Could add that. Would that be better for February? Or, well, February is a shorter agenda, isn't it? It's just that, yeah, would that be all right? Is Neil still there? Could that be done in that time frame?
Of course it can, Chair. I can't remember what the timescales are in terms of this committee and council meeting, in terms of whether it'll still be a draft for formal approval at council, but certainly the plan is there. It's in the public domain now. The delivery plan is there, so I don't see any problems or issues with bringing it to committee in February if the agenda allows it to do so.
Great. If not, if it doesn't allow it, we'll have it for April, but hopefully we can get it on agenda for February. So thank you for that, Nigel. That's a good suggestion. Any else comments? No. Okay. So we'll also say that.
If I may, just two quick ones. Yes. On the 21st of February agenda, we've got the assurance report on equality, diversity and inclusion. Given what we said earlier about geography, could we ask the officers to include geography in that?
Yeah.
As the early discussion. And my other comment was agenda page 74, item 8.1. And this is a little bit of semantics, so I apologise.
Yeah.
But the The way the report's written, it's instructing this committee what to do.
Sorry, what number did you say?
Oh, sorry, it's page 74, agenda page 74, yeah. And it's paragraph 8.1. The Audit and Governance Committee will respond positively.
Yes.
It might not want to.
Yeah.
So I say I appreciate your semantics.
Point taken. That should be just will
you.
Respond. Yeah.
Thank you.
All right. Thank you for that. Okay. All right. And are we okay with adding geography to the assurance report on equality and diversity?
I'll speak to Jill Clayton, Chair, who's writing that report, and ask her to do so. Thank you.
All right. Thank you very much. Okay. So if there are no more comments, that was the last item on today's agenda. And could I thank you all for your attendance and for your contributions. And the meeting is now closed. Thank you.
Thank you, Chair.